Let's talk about the mutual fund data. Net equity mutual fund flows showed an uptick in March, posting a positive figure after 4 months. But the overall outflow in balanced funds hurt the picture. Yash Upadhyay caught up with AMFI CEO NS Venkatesh and started off by asking him why he thought equity funds saw such a recovery in March.
Couple of factors. One is essentially the credit events thing had a little bit receded. The second one is essentially the border tensions have also eased. The third one is the macroeconomic indicators, which says that essentially we will be growing at over 7%, coupled with the inflation also being within a moderate range of somewhere around 2.5 to 3%. So I think that has boosted the sentiments in the market. The volatility in the market has eased, and we find that there is a bullish sort of a trend coming up into the equity market, getting reflected by the NSE 50, the Nifty 50 showing better numbers, scaling new heights, and the Sensex also scaling better heights. So I think that has rubbed off into the mutual fund industry, in the sense that the mutual fund investments have also shown particularly predominant preference for people to start investing into the equity mutual funds.
So while the retail investor has remained very mature and we have seen yet another month of 8,000 crores plus of an SIP book, but that number at about 8,055 crores is somewhat, limited. While it is only about marginally lower than the previous month, do you see any risk of, an upward movement from here on, or do you see that this is some sort of a cap to that number?
We don't see it, because if we look at the way the SIPs have grown, SIPs were at around 7,100 crores as on March 2018, which has come to 8,055 crores as on March 2019. So roughly around 1,000 crores over 1 year it has increased. Right. So we believe that with the various investor awareness campaigns that we are running, the distributors also reaching out to the last mile investor, we believe that the SIP as a process will continue. If you look at the number of accounts that we have opened in SIP, the SIP numbers were 2.11 crore accounts in March 18, which is now at around 2.62 crore in March 19. That means we have added around 51 lakh accounts during this 1 year itself. So I think it is showing a robust growth. So we are quite confident that going ahead, when the volatility is going to be lower and when the market is going to look up, we will find that more and more people will use SIP as a process to start investing into the mutual fund industry.
That's right, sir. But one more thing that stood out for me, at least, was the fact that the income segment reported a big jump up of almost 13,000 crore rupees in the month of March after a series of months of negative outflows. Is it just a one-off, or do you see a pickup in trend from here on?
I think we are turning, that market is turning, in the sense that previously it used to be negative or marginally positive. From there it has now come to around 13,000 crore. So it's turning. People's investment preference is turning, mainly based on the fact that the monetary policy stance has changed. The monetary policy stance has changed into, one, the dovishness in the market with the rate cuts coming in, then clear assurance from the central bank that they are willing to give more liquidity into the market. So I think these two factors have brought in that positive sentiment into the income funds, or the debt funds for that matter, plus the worries of the credit events which have happened is slowly receding. So I think these two factors have given a fillip for the income funds to grow.
So one of the biggest contributor to the outflows in terms of total mutual fund industry was the fact that we saw a more than doubling of the outflows in the balanced fund segment, more than 51,000 crores for the month of March. Have investors completely lost faith in the balanced fund segment? What are you gathering?
No. On the 51,000 crore part, it is essentially, I would say, it has come from the liquid funds. But the balance funds, yes, there is a negative outflow in the balance funds of around 4,000 crore for this month. I would say that the balance funds, mainly because of the tax structure getting changed, people are reassessing as to how to look at it. Second one is reallocating from balance funds into the income funds and maybe the other funds where they feel that they are able to get a better return at this stage. I think that reallocation strategy is also going around. But I believe that for a investor who is only for taking moderate risk, balance funds is the best funds to stay invested. So I think some of them will come back into the balance funds at a later stage after reassessing their risk appetite.
All right, back to the markets then, and let's find out what has made it to Yash Upadhyay's list of the